So, dear students, I welcome you all in today's session, day one of AAA revision marathon series. For the upcoming session, that is December 2024. My name is Munir Muhammad Shafi, and I will be your facilitator for these sessions. The objective of these sessions is that before examination, we can gear up ourselves, we can pump up ourselves, and we can have key revision, all important revision of key topics. And we can have some hands-on the recent past exam questions. Okay. The core objective of these sessions is additionally to enable you to come out of your failures. Because AAA is such a paper where the students tend to struggle in passing this paper. Okay. And the difference is not so much. Many students flunk this paper by 4 marks, 5 marks, 6 marks on 43, 46, 44, 47. So what our aim will be to help students to bridge that gap. Okay? Because the students sitting in these sessions, obviously they have gone through the key topics, they've gone through the content, they have studied on their own, they have a study text, they have education hub access, the official portal of ACCA. They have the education hub access, they have the access to the questions of education hub, practice kits, a lot of they have a lot of material with them for the preparation. But the important thing is that in few areas, they're lacking the guideline. They're lacking the exam tips. They're lacking the exam techniques. And I always emphasize this fact that a student who can master his or her exam technique can pass through this paper easily. Okay. So I'll try my best to enable you to learn those techniques, to enable you to practice those techniques. Obviously, we can see few questions. Okay, we can see few questions in these 2-3 days, but you have time available with you. You have to do self-practice, additional practice. A lot of content is available. Examiner comments are available, marking schemes are available, suggested solutions are available. You have to make the most of it. And AAA is such a paper that you have to practice the best. You have to keep on practicing. You have to keep on practicing. And the many questions you will attempt, the many questions you will see, the many scenarios you will go through, then you'll sit in the exam. The thoughts will start pouring in your mind. Why? Because you've practiced so much that you will feel that you might have gone through all possible scenarios, that you might have gone through all possible requirements. Because examiner, obviously, if you see last many papers, you will see adjustments repeating, repetitive adjustments. And the irony is that students keep on committing mistakes on those repetitive adjustments. Okay? So you have to make yourself sure that you do not fall prey to this. You have to practice, practice, and practice. Okay? And you are professional students. You have all the material available, you have all the guidance available. You can write on your own, you can go through on your own, and you can practice on you. In CB exams, obviously, we know that now all exams are CB. Earlier, this paper was also paper-based exam. Now it's all about CB. So your typing matters the most. So if students have slow typing, you have to increase your typing speed, obviously. Okay. So having said that, moving on, a bit about myself. My name is Munir Muhammad Shafi, as I've already told you. I'm the subject specialist for advanced audit and assurance in SBR. I have been teaching these subjects since last many years. I myself am a practicing auditor. I'm a practicing chartered accountant. I myself am a fellow chartered certified accountant, fellow chartered accountant from ICAP. In Pakistan, ICAP members have the practicing rights, so I'm a practicing chartered accountant. I have been member of various technical and professional committees. I have been earlier associated with KPMG Pakistan. And here is my contact information on your screens. Thank you. Okay, so session agenda. Session agenda is also on your screens. Out AAA. Its importance amongst all professional skill papers. Well, this is not the time to discuss it. We know how important it is. And at this point of time, the importance of this paper is more from exam perspective rather than anything else. If I tell you it's very much practical paper and it gives you a lot of exposure and you have a lot of career growth and development through this paper, you'll say, oh, tutor, make us pass this exam at this level because we are concerned about passing this paper. Okay. So the most important thing at this point of time is that all of us are interested in making you succeed in the upcoming attempt. That's the biggest importance of this paper at this point of time, obviously. Okay. We're going to look at the paper pattern in key areas, obviously, because we have to see what this is about, how the examiner is testing the requirements. Uh, we'll notice that passing ratio is not that good. It ranges from 30 to 34%. In the previous attempt, it was a bit better. If I can recall it correctly, it was 35 or 36% or so. It usually is the worst amongst the professional papers. Okay. So you have to make it best for you because those who pass, that's 100% for them. Okay. So you have to make it 100% for yourself. Okay. Okay. Then we talk about, uh, okay. And I've already discussed this, that why the passing ratio is not so good. Why the passing ratio is not so good? Because somehow students tend to take it lightly. We can write, we know how to audit, we have been auditing, uh, and we can simply go through the text and we can write the solutions. The answer is no. You have to practice. And through practice, your writing skills will be refined, will be enhanced. And a mature writing skills are the key to success in AAA. Professional skill marks. There are a few very important professional skills which your examiner has identified for you. And when you are drafting your answers, you have to take care of these professional skills. Your answer pattern should include these professional skills. Your answer should reflect these professional skills, that you possess these professional skills. For example, professional skepticism and judgment. Very important for an audit student. Whatever he writes, it should give an impression that he is thinking from professional skepticism. He is making use of his judgment. He is producing arguments uh, by looking at the given circumstances. Okay. Analysis. Okay. Analysis. You have to do analysis. You have to do proper analysis. Commercial acumen, there are marks for it. Communication skills, there are marks for it. Okay. So when we will be attempting the questions, I'll try to highlight that which are the key areas where these professional skill marks could be enhanced, could be grabbed easily. Okay. Reasons of failure, many, few we've already discussed, few just following. We will try our level best to have the conceptual revision of all key areas of AAA. We will try our level best to recap all the key exam techniques, and we will try our level best to have a look at as many questions as we could. Okay. This is AAA exam pattern. It is on your screens. Then we'll open the CB practice platform. We will see the exam papers, the triple exam papers in this format. What it is. You have 3 questions, all compulsory questions, obviously. The first one is of 50 marks, second one is of 25 marks, and the third one is again of 25 marks. And obviously, you have to score the maximum from all 3. The first question is usually set at the planning stage. It could be an existing or a new client, and you have to plan its audit. When we say planning, it means you have to assess the risk associated with the engagement. Because the risk assessment is the key element of the planning stage. Because when you are planning a new engagement, you will have to see what could be the potential problems. And if I target those potential problems and if I channelize my audit procedures to address those potential problems, then my audit could be an effective one. I might be successful in identifying the problems in financial statements. I might be successful in identifying the misstatements in the financial statements. So I have to plan things properly. Whatever you do, you plan. When you are going to appear in your examinations, you are planning. This is an important area. This is an unimportant area. This comes up frequently. This never comes up. Planning is the key to success in every area. Be it your exam, be it your journey, be it anything. Be it triple exam. Okay. Be it audit itself. Are you getting this? So planning is very important, and a risk assessment is a key element of the planning phase, and this is tested like anything. Must question. Question number 1. And the first or second part of question number 1. Must appearing requirement. Risk assessment. Business risk. Risk of material misstatement. Then you may also see ethical and professional and quality management matters, because it's a big question. Not only risk assessment will be tested, ethical situations might also be tested. Relevant procedures or evidences which you will be performing on the risky areas will also be tested. Then it's completion, review, and reporting. Okay. Now, what is this? Completion, review, and reporting. And conduct of the audit, obviously. So see, procedures are here as well, procedures are here as well. There are 3 broad phases of audit: planning phase, actual testing, and then completion, review, and reporting. So usually the planning and of an existing or a new client, it also contains procedures, which is a part of testing phase. Then we come to completion, review, reporting phase. A question is set on this scenario, on this context. It's a completion phase. When the audit is being finalized, audit engagement is getting signed off, and things to consider like that. So again, procedures, what opinion are you going to give it in the events when there are misstatements, when there are lack of evidences, or any other situation asking for reporting implications. So you have to take care of those situations. Ethical and professional matters. And the last question usually comes up from Other assignments. Other assignments. A very important area. Okay. So usually other assignments, current issue, any exam article, if examiner gives any recent exam article on any of the other assignment, usually he gives art, he presents his thoughts on any other assignments. If that's the case, that specific other assignment gets important. For example, if the examiner has issued an article on forensics auditing, then for the upcoming attempt, forensics gets important. Okay. And here we talk about the acceptance considerations of the non-auditing agents, not the audit one, the non-audit one. Okay. Here again, we have to write the procedures, but here these are not audit procedures. These are the procedures to perform these assignments, although they are very much similar, very much similar. But obviously, you have to take care that in which situation you are writing procedures. Are you getting this? So this is a brief overview of the exam paper. Ethical requirements can feature in any question. Audit and other procedures can feature in any question. Other standards requirements are tested periodically. This is just an indicative grade. Reasons of failure, many we have already discussed. Selective studies, this is a very important. This is very, very important reason. This is a very, very common reason that many students fail to recall their accounting requirements. Number one, they fail to recall. Number two, they fail to apply. Even if they recall, they're unable to apply. So in exam paper, you have to recall the accounting requirements as well, and you have to apply it as well properly. As I've been emphasizing, paper technique is very important, obviously, because you cannot write like a layman. What is business risk? What is audit risk? And how are you going to draft audit risk? What are the considerations when you are drafting an audit risk? Because examiner will be awarding you marks on your drafting. And in drafting, there are particular elements. For example, if you talk about risk of material misstatement, then describing the materiality of an issue is important. Describing the area which is under the risk is important. Describing the accounting issue, underlying issue, accounting resolution is important. Risk impact areas important. So all these, when combined, becomes paper technique. That when you are going to write a financial statement risk, what is the exam technique of writing it? You cannot simply just write like a layman that for no reason that uh, admin expenses have risk of misstatement. Okay, you cannot write like that. You have to explain it properly, keeping in view the exam technique. Okay, lack of practice. As I already told you, poor answer planning, unable to complete issues. These have been the areas which I have already highlighted. Poor typing speed, poor time management, ignoring marking schemes, technical articles, lack of practice is very, very important reason. Very important reason. I can guarantee you today one thing. I can guarantee. Listen it very carefully. Today we are standing on 21st of November. 21st of November. You still have at least 10 days, 10, 12, 13 days in your exam. I can guarantee you by the grace of Allah, by the will of Allah, inshallah, if any student attempts with his own hands, if any student can attempt 4 to 5 exam completely, at least three, make it three, at least 3 exam papers completely with all questions, the more the better. His chances of passing increase by 100%. For example, with your current state of preparation, your chances of passing are 30%. And if you do what I'm saying, your chances of passing will increase from 30% to 60%. 100% chances will increase. And that's a tried and tested formula. Many students hate practicing AAA. They hate typing their answers. What they do, they simply look at the question, think the answers in their own heads, and then read the answers, read the marking scheme. This is not going to work for you, dears. No, this is not going to work. Are you getting this? You have to actually practice the exam papers. And I'm guaranteeing you, your chances of passing will be double. And when you have already faced a failure in past, don't take risk, and you should be attempting 5 past exam papers safely. Is everyone getting what I'm trying to say? Everyone, can you please acknowledge? Am I crystal clear? Any questions still here? Any comments still here? Please let me know. Am I clearly audible as well so that we can proceed? Great. Okay. So now we'll be looking at few technical areas. We will be having the quick revision of key areas, and then we'll be moving on towards practice. Okay, because concepts are also very important. Until and unless you know the concepts, how can you attempt a question? So we are now on our concepts. So let me finish my tea, and I'll resume in the next 5 minutes. Okay, so let me finish my tea, and I'll resume in the next 5 minutes. Getting? Thank you. Okay, so dear students, welcome back. Just a minute. Okay. So dear students, we'll now be having a quick revision. Quick means quick revision, so that we can refresh few important topics. So when we go to attempt past exam questions, we feel comfortable, at least as far as the conceptual areas are concerned. Okay. And as far as the application of your professional skills is concerned, I'll try to let you know how you're going to proceed. So, the first topic of discussion, a very quick discussion, is the topic of money laundering. Not a very important topic from exam perspective, but it comes up. At least few key considerations, because whenever a new client is onboarded, this is one of the very important considerations that you see, whether the client is not associated with any money laundering offense. Okay. And even when you have started the audit, you still have a duty that when you are auditing, you should be very much alert to any suspicion which may arise during the course of audit. Okay. What is money laundering? Basically, it's cleansing the illegal money. And many clients do this, especially service-based sectors, because there is no goods being transferred. So there could be potentially illegal money being channelized through that service business, and uh, it has been made to look as if it is legal amount being received. Okay, and the proceeds of tax evasion is also an illegal money. If you are cleansing it, it means that you are laundering the money, cleaning the money. Okay. So there are multiple legislations which are in place. Obviously, you can read this. There could be offenses. First of all, the money laundering offense, which the clients commit. We are the auditor, we are auditing the client. Money laundering is the offense which is committed by the client. Tipping them off. If you are the auditor and you are auditing and you give them an indication that you are getting clue, you are having few evidences, you're having clue that they are involved in money laundering. So rather than reporting to the relevant authority, you are tipping off the client. That's an offense. Not setting up the procedures in the firm, not complying with the procedures of money laundering, that's an offense. Okay. So what are the duties? Client due diligence. When the client is onboarded, have proper due diligence, background checks. Directors are not involving any hanky-panky. Their background is clean, everything is okay. Appointing a money laundering reporting officer. MLRO means money laundering reporting officer, a senior person in the firm who, if identifies or who corresponds with the legal authority. For example, if an audit team member is auditing something and he gets a clue, client might be laundering the money, then that audit team member will report to me if I'm money laundering reporting officer of my firm, because all chartered accountant firms everywhere are supposed to have an MLRO. Our firm also has a money laundering reporting officer. My chartered accountancy firm also has a money laundering reporting officer. My partner is MLRO. So suppose even if I identify any money laundering suspicion at any of my client, which I am auditing, then I am supposed to communicate this to my partner, who is MLRO, because he is the one who is designated within the organization and he will correspond with the regulatory authorities if there is a need to escalate that issue any further. Staff training is very important. We have to train our staff. And the reporting needs are that the team members should be reporting to internally to MLRO, the one who is the senior person in the organization looking at money laundering affairs, and that MLRO will correspond with the external regulatory authorities. MLRO is not at client's place. He is the senior person in the audit firm. Umar, I hope it's clear. Okay. So what are the client identification procedures? If a new client is getting onboarded, how can we check? How can we do a background check? For an individual, you can have its utility bills, driving license, passport. For a company, certificate of incorporation, background checks. Now from social media as well, in newspapers as well, many things, okay? Their key documents. For a trust, we have to see their documents, okay? So these are the responsibilities, and this is all about money laundering. Uh, Bottom line is that we have the responsibility to be aware at all steps of the audit. And if we identify any hanky-panky that client is involved in money laundering, we should be reporting internally and we should be following the due process. That's it. The next topic of discussion, very, very important. And okay. Very, very important and frequently asked by the examiner. Fundamental principles of ethics. There are 5 fundamental principles of ethics. Integrity, being honest. We are auditing, we should be honest. Any misstatement, any problem, we should report it. We should follow the due procedure. Honesty. Fair in the dealings from all aspects. Objectivity. We have to do our duty and we shouldn't be pressurized by anything whatsoever. neither any pressure, influence, neither any uh, clouds being surrounded by self-interest threat. Suppose if we are looking at our interest and we see that this might benefit us, and on account of that potential benefit, we cloud our judgment, we change our judgment, uh, we compromise the objectivity. That's not allowed. Okay. Professional competence in due care. Obviously, we chartered accountants, chartered certified accountants, we are bound by this duty that we maintain professional competence. We maintain professional competence in due care. We should keep ourselves updated with the latest laws, legislations, reporting standards, things like that. Okay. Taxation knowledge, reporting knowledge, whatever knowledge is required, we should keep ourselves up to date. And the profession takes care of it. CPD, okay, continuing professional development, trainings, and etc. Confidentiality, whatever data of the client we get in our hands, we are bound by the duty of confidentiality. Professional, we cannot disclose it to anyone. We cannot use it for our benefit. We cannot disclose it to anyone. Okay. So, are there any exceptions? Yes, there are. We will be having a look at it. Professional behavior. If we are in the audit practice, obviously, whatever guidelines are molding our behavior, whatever guidelines are there to regulate our behavior, we should be aware of those. For example, Core of Corporate Governance Guidelines. How should auditor behave? To whom auditor should communicate? How the auditor will communicate with internal audit? What are the latest independence requirements? The behavioral aspects or the latest developments in those behavioral aspects which are governed by any law. Auditor should be aware of those. Okay, so let us discuss these first. What could be the threats to objectivity? What could be the threats to objectivity? Okay. Out of all these five, this is frequently tested. Why? Because there are situations, there are events, there are situations, there are conditions which trigger the non-objective behavior. Therefore, this is very important, the most important one. This comes up very less, once in a blue moon. Yes, it does. It is examined in the paper. Yes, it comes up. But the most frequently tested area amongst these fundamental ethical principles is objectivity. Objectivity. In short, what do we mean by objectivity? Objectivity. Objectively behaving. And by objectively behaving, what I'm supposed to do? I'm supposed to give my objective opinion, independent opinion, on the order of the financial statements, on financial statements. If I'm objective, I will not accept any influence, I'll not accept any pressure, I'll report in the manner that I'm expected to do so. But suppose if I'm clouded by circumstances, suppose few circumstances which are favoring me, so can I change my opinion? Can I change my behavior? Can I change? Uh, can I become independent? Answer is yes. For example, self-interest threat. If I'm having undue dependence on a fee from a client, then can I make him unhappy? Can I identify so many mistakes of that from that financial statements? Because if the client gets unhappy, he may say, Next time, we won't be ordering from you. You won't be ordering our FS. Someone may own shares in the client, self-interest. So if I own shares in the client, will I be willing to go against the client? Will I be willing to propose any adjustment or any rectification which may lower down the profits of the client? Because if the profits of the client will go down, my value of shares held in the client will also go down. So that means I'm not acting objectively. And I am thinking of, and I'm thinking of other areas. I'm thinking of other aspects. I'm thinking of other situational problems or my interest. And I'm not bothered about my objectivity, my objective duty, my primary duty to care to shareholders. Are you getting this? So all these other threats to objectivity. Okay. Self-review threat, familiarity threat, management threat, intimidation threat, advocacy threat. So I'm throwing some light on each of it. Very easy. These are very easy threats, and you already you might already have a very good idea about all these threats to objectivity. Self-interest, I've already explained you what is self-interest. My judgment is influenced, is impacted by my self-interest. My judgment, my objectivity is impacted by my self-review. My judgment, my objectivity, or my uh, obligation to act independently gets affected on account of familiarity. My ability to act independently might be affected with the management position on which I'm sitting. My ability to act objectively, independently, might be impacted, might be suffered on account of intimidation, on account of pressure, on account of threat I might be facing from client or someone else. So all these situations are giving rise to threat to objectivity. How? That's the key important point. Because the students rightly say in many answers, rightly write in many answers, that this situation creates self-review threat. But how and why? You have to explain how and why. Are you getting this? Explanation is the key to success. Students who lose the marks, they fail to explain it properly. For example, self-interest threat. If the situation contains the undue dependence on fee from the client, so you have to check whether it is allowed or not. If it's allowed, which threat? Self-interest threat. Can it be reduced? Answer is yes, it can be reduced. But how and why it creates self-interest threat? Because if the firm is highly dependent on fees from a single client, then the partner might not be willing to go against the client, might not be willing to propose or to identify the misstatements of the client, secure this client in the future. Self-interest. So explanation is very important. Just writing it, it's self-interest threat. That will not fetch you much marks. Self-interest threat, this creates self-interest threat. The things do not end here. The reason starts after this. This is because holding shares in a client creates self-interest threat. This is because the financial investment of the auditor is at stake, and auditor will not be willing to reduce the value of the financial statements by proposing the adjustment to the profits. This is the complete reason why it creates self-interest threat. So you have to draft the reason. You have to write the reason. And the reason is the key to success. In threats, obviously, these threats are easy area. Students consider this area to be easy. And even if you are planning to lose marks in easy areas, then how can you do in difficult areas? This is one of the easiest area. And I've already told you what the students commit. They commit these mistakes. They don't write the reasons. For example, self-review threat. Self-review threat. For example, the exam question says about that you have been asked by the client to perform data entry, compile financial statements. So this situation creates self-review threat. Why? Because the financial statements compiled by the firm's own resource will be subject to audit by the firm itself at later stage. As a result of which, the firm could either hide the misstatement done by his own team member or may fail to identify his own mistake. There will be both reasons. In self-review threat, there are both reasons. Number one, we may not identify our mistake. Simple. If you are attempting triple A paper and someone gives you to check your own paper, you'll say it's 100% perfect, 100 out of 100. Because you are reviewing it. As per your knowledge, it's okay. And that's the threat. It's all okay for you, not an actual. That's the threat. Self-review threat, because you will think that whatever you have done the masterpiece. Therefore, it is always said, and therefore this is the criteria that review should be done by someone else. If we are providing one of the service and then we are reviewing it as the auditor of the financial year, then we will be auditing our own mistakes. We will be checking our own mistakes. And if you're not objective, if you're not independent, if you're not so sorry, self-review threat. What I was talking, it simply skipped from my mind. Oh, yeah, I was talking about self-review threat. For example, if you were mocking your own exam, and even if you are very honest, even then you will say that's the masterpiece. That's a self-review threat. You're unable to identify your own mistakes. And even if you are willing to identify your own mistakes, you may say, oh my God, I've done this mistake. If I identify, I have to give myself only 46 marks out of 100. So let's make it right. In this way, I'll be 50 above and I'll pass this exam. Oh goodness, have you done this right? Self-review threat. I'm reviewing my own work so I can do some hanky panky as well. I'm reviewing my own work. I'm reviewing my own work. So I may become over reliant on my own work. Whatever I've done right. Whatever I've done or whatever financial statements have been compiled by my team member. Over reliance also creates a self-review threat. Getting familiarity threat, a situation in which there is a long relationship, family relationship, long involvement, familiarity threat, that the relationship are good, and if you identify something problematic in the financial statements, if we identify something problematic in the financial statements, then these relationships could be tarnished. Okay. Management decisions, if the client asks us to perform any management role, making decisions, serving on board of directors, making decisions, looking at IT controls or internal audit like thing, that may create some management role. Because all these positions, being IT person, being head of internal audit, or being any other, being the director on the BOD, all these have their say, all these have their role. All these have their say and all these have their roles in the client's management. which is not allowed by the auditing standard. Because auditing standards say you are independent. You are not the representative of the client. You are the auditor, and auditor is independent. And if you will perform the management role, it will give an impression that you are part of the management. And if you are part of the management, you are driving benefits out of the management role. How can you identify any issue if it comes during audit? Because you yourself have been in the management. Everything was done under your nose. Intimidations, pressure, pressure from the client to do the work quickly, pressure from the client to usually intimidation threat contains pressure from the client to do the work quickly. This may reduce the quality. Pressure from the client to do the work quickly, otherwise they will change the order. Pressurizing. Pressure from the client that give us this opinion, otherwise we will change you. Intimidation threat. Threatening of auditor removal. Okay. Advocacy. We are the auditor and we are negotiating with the bank on behalf of the client to secure a loan. We are the auditor and we are promoting the client's shares. Why are we promoting the client's share? We are here to check whether the client has been reporting properly or not. Are you hearing this? So advocacy, threat, representing client to take a bank loan in the court of law, anything. Advocating the interest of the client. Advocating the interest of the client. That again creates advocacy threat. So what are you going to do? You have to first identify the threat. Then you have to assess it, evaluate it. And not only identifying, you have to draft it as well, obviously. Then you have to assess it. Are there any safeguards? If yes, then reduce the threat to an acceptable level. If there are safeguards, possibility one, reduce the threat to the acceptable level, reduce the severity of the threat. But if there are no procedures available, do away with it. Leave the client, leave the engagement, leave the site, resign from it, eliminate the threat, decline the engagement. So obviously, from business perspective, this is not an option. This is an option. Okay. From business mindset perspective, to evaluate the significance, consider the materiality of the matter, senior people involved, and etc. Obviously, this materiality will depend upon other factors. The treatment, the safeguard depends upon other factors as well. Okay, so it's Azan going in my background. Call for prayers. So I'm taking a 1 minute silence break, and then after 10 minutes, we will be moving on to the prayers break. Okay. Okay, so dear students, well, we'll be moving on to the prayers break in around 5 to 7 minutes. So before that, we have 5 to 7 minutes with us. So let us discuss few concepts. Okay, yeah. Let us try to cover these three slides. Confidentiality, obviously, we are auditors and we are bound by the law to preserve confidentiality. We are not supposed to disclose the confidential information of the client. We are not supposed to leak it. We are bound by the confidentiality agreements. Over and above all, the very concept of the trust which the client has placed on us. And we cannot breach that trust. We cannot leak the confidential information, the trade secret, the business secret, anything. So, confidential by the virtue of this responsibility, We cannot disclose anything. But there are certain situations where we can and we are required to disclose. Okay, when it's required by law, when there is when the disclosure is permitted by law, that means it's not some information which is not restricted by the law, or the professional duty or right to disclose when it's not prohibited by the law. For example, required by the law. Now that's compulsion. You have to disclose. For example, if there's a legal proceedings and the legal authority asks you, share the information, share the documents, you have to. To the appropriate public authorities of the infringements of the law identified, when it's in public interest, basically. Okay, when it is in public interest, public authorities ask, you have certain information that public rights have been violated. The client is using some hazardous material in the products. So you have to disclose this. Tax evasion, money laundering, you have to disclose. Disclosure permitted by law and authorized by the employer by the client or employer. Something which has been authorized by the client, something which is permitted by the law. Okay. For example, if you are disclosing some information which is already available at large, that's not a big deal. That's not a problem. Or any information which the client has not restricted you. Okay. Then there is a professional duty or right to disclose. Comply with the ACC review, responding to ACC investigation or regulatory body, to protect the professional interest of professional accountant in legal proceedings, comply with the technical standards or ethical requirement. Any authority or any body asks for that. Conflict of interest is a situation when you are auditor and you are working or you are providing services to multiple clients who have common interests. So if you will do good for one, it'll be bad for the other. And if you are auditing for both, so you will be knowing the trade secrets of both. And if the information is leaked, it may benefit one, the cost of the other. Conflict. For example, if you are auditing two cell phone companies, so if you leak the trade secrets of one to the other, that's problem. Or if you look at very good controls implemented by one cellular company, and if you suggest those good controls to another cellular company, this will give them edge over this one. That's a problem. Conflict of interest. Questions are there in the examination in which the examiner is asked situations where there's a situation of conflict of interest. If you do good for if you do something good for one, it becomes bad for the other. In such situations, arise where an auditor acts for both a client company and for the competitor company. Both are client and both are, one is the customer of the other, or both are competitors. The situation is acceptable where there are proper safeguards implemented, but you should notify the affected clients. Additional safeguards must be considered. Consider it when you are accepting it. Regular review of safeguards. Use different partners, different teams. Restrict the information. Don't allow it to cross over. Information barriers should be very strong so that the information is not discussed amongst the team. If you are handling both the clients, you should be handling them with a lot of care, advising any of the clients, seek additional advice. And even if you think appropriate, you may have to leave one client if there are severe issues. The question of ethics is very straightforward. You have to identify the situation. See, you have to identify, and then you have to comment on the ethical or professional issue. Identify and comment on it. Okay. You should consider and explain all potential threats within a scenario. A scenario will contain multiple threats. Explain every threat. Even if one situation is giving rise to multiple threats. For example, partner is uh, okay. A partner is providing services to a client, and a partner is acting as a partner of that client for the last 10 years and have a good relationship, obviously, on account of that long relationship. It's a very good relationship. So there are problems. This is a familiarity threat, long association. This situation, self interest threat. So a single situation may lead to multiple threats. In the question, I'll show you that how you are going to identify these multiple threats in one situation. Okay. So write every threat. You'll get the credits for that. You must expand on all these areas. Independent threat to independence. You have to write safeguards. Okay. Let me see. Okay. So when you are drafting an answer, what's the problem? Explain that problem, safeguard. What is an issue? Why is this an issue? Plus safeguard. What is an issue? Why is an issue? Write both, you will get 1 mark. And if there is a lot to write, you may get more than one, but that's one use. Identifying the threat, it creates self-interest threat. You will not get 1 mark, you'll get half a mark. Okay. Explained. Explain it plus safeguard. 1 + 1, 2. 2 for a threat. Easily. Getting? Let me see if I can give you any question when in the time. Okay, so what you can have, you can also have a break, and we'll resume once I'm back after the prayers. So it's prayers time here in Pakistan, in Karachi, especially. So we'll resume after the prayers break. Okay, so session will resume after break. This is the prayers break, and those who wish to offer their prayers, you can please do so. Those who wish to have a cup of coffee or a tea, please do so. And we will be back shortly. Okay. So we'll be there after the break. Thank you. Dear students, welcome back. Can you please confirm me? Am I clearly audible and visible to all of you? Dear students, can you please confirm me? Am I clearly audible and visible to all of you? Great. Okay. So today, whatever remaining time we have, our focus will be to revise the conceptual areas, uh, because today I'm a bit tired. I had back-to-back meetings today, on account of which today's session was unfortunately delayed. So I'm a bit tired today. So there may be a possibility, apologies for the inconvenience in advance, but there could be a possibility that while explaining you the topic, I may feel even sleepy. So whenever I will feel so, we'll call off the session. And then we will continue hopefully tomorrow. And if not tomorrow, then on Saturday. On Saturday, we'll be having around a 4 or 5 hour session, a full of practice session on Saturday. As far as tomorrow's session is concerned, tomorrow's slot is concerned, I'll confirm you. But Saturday, hopefully, will be a confirmed session, inshallah. Okay. So we will cover the conceptual areas as more as we can in the remaining time today, hopefully for an hour or so. And then to the extent of my to the extent of my ability. Okay. I'll try to continue. And when I'll feel sleepy, as I already told you, I may have to call off the session. Okay. So we are now discussing laws and regulations in an audit of financial statements. This is again a very important standard as far as your examinations are concerned, because this standards have its implication within the questions. A full-fledged question is not made above this standard, but this has its significance, because many a times you will feel that there is a non-compliance of law or regulation which has been hinted to you by your examiner. So what are the responsibilities of the auditor? What are the responsibilities of the management? These play a very important role in your answers. So summarizing in short, the prime responsibility is of the management. Those who are looking, overseeing the management, the directors, they have the primary responsibility to comply with the laws and regulations. What auditor can do, because see, what are laws? What are regulations? They need to be followed 365 days a year, throughout the year. And what audit is? Audit is a review of historical financial information. Once everything is done and dusted, all operations have been done, we are auditing the figures of the financial statements. Are you getting this? So it should be the primary responsibilities of the management. It should be the primary responsibility of the management, and no doubt at all, because they are the one who are looking at the affairs throughout the year. They are the one who have to ensure the compliance. What auditor can do? Auditor can highlight the non-compliance, and that too when it comes into the notice of the auditor. So the standards emphasize that auditor should have the knowledge of laws and regulation in the first place. Which laws? Those laws which have the direct impact on the figures of the financial statements, because auditor cannot make himself aware of all the operational laws being applicable on the client. Okay. Yes, but it is the duty of the auditor, as part of taking the understanding of the entity, that auditor should at least have the knowledge of those laws which have the direct impact on the numbers of the financial statements. Okay. And auditor should specifically perform the procedures to identify whether there could be any non-compliance or not, whether there have been any non-compliance or not. This is the responsibility of the auditor. And if the auditor identifies it, then it's the responsibility of the auditor to assess its financial impact, communicate to the management, and things like that. So this is what this standard says. It's not a very complex standard. So the primary responsibility of the directors, of the management, to prevent, detect the non-compliance. And as far as the auditors are concerned, they are concerned with their opinion, with their obligation to obtain reasonable assurance. Are you getting this? And they have then the responsibility to obtain sufficient and appropriate evidence that all those laws which have the direct impact on the financial statements have been complied. They need to perform the specified procedures as well as the standards will prescribe. To respond appropriately if non-compliance is identified, and if there is any non-compliance, then respond it appropriately. What are the procedures? These are the general procedures. Obtain the general understanding, inspect the correspondence with the licensing authority, ensure the management is in compliance with the laws and regulations, consider the result of other audit procedures. Have there been any payments to the lawyer? Have been any payments of penalties? The other audit procedures, expense vouching, board of director meetings, okay, minutes, written confirmation from the directors that they have disclosed all non-compliances to you. So these are the primary procedures. Just read it once or twice and you'll learn these procedures simply. Then to whom the auditor will report the non-compliance. The auditor will report the non-compliance to management, obviously, in the very first place. If the problem is very significant, if it has impact on the opinion, if it has an impact on the implication on the opinion, then we need to communicate to shareholders as well. And if the non-compliance is so severe, for example, money laundering concern, for example, any breach of public interest regulation, if not disclosed to the legal authority, there could be damage to the public interest. Public might be injured. As I told you, a client is making toys which and a hazardous chemical has been used in the toys, and you know this. Not allowed. You need to communicate to the third party, with the regulator. But keep the principle of confidentiality in mind. What are the exceptions available there? Utilize those, but be aware of this principle of confidentiality. Very important, okay? So this is about laws and regulation. Then we have fraud and error. Is auditor responsible to identify fraud? That's an expectation gap. The shareholders assume the auditor is there to identify the fraud. Well, that's not the case in actual. It's the management's responsibility to take care of all the errors and fraud, because they are the one, again, who are looking at the operations the entire year, 365 days a year. So they are in the better position to implement controls, to implement those activities that prevent, detect fraud and error, and prevent, detect, and correct fraud and errors. Auditor is coming at the end of the year or even after the year for the audit only. Year has passed. Events have occurred. Auditor is there to check the historical numbers. But yes, the standards impose the responsibility on the auditor as well. That while assessing the risk, they should assess the risk of fraud. While assessing the risk, they should assess the risk of fraud. Which areas are prone to the fraud? Which areas are risky? Or which areas may be stinking fraud? Like if there is any potential, for example, revenue, auditors expect that revenue contains risk of fraud. Then the standard says to perform such procedures which we are guiding you to address that risk. That's it. And be alert. Very important. Be alert. But to the management, what they are saying, you are the primary responsible person. You have to perform the main responsibility. Auditor is only there to perform limited procedures only to fulfill their obligation to report on the financial statements. They are not testing 100% transactions. They are not the one who are looking at all the affairs of the company throughout the year. They'll perform certain transactions. They'll perform certain testing. They'll follow the requirements of the standards. If the fraud is uncovered, they will report, they'll communicate. But what if it is not identified by the auditor? Does it mean that the primary culprit or the primary person responsible for that being devolved of its responsibility? Answer is no. Are you getting this? And the difference between the fraud and error. Error is unintentional, fraud is intentional. If there is any error, if the auditor identifies any error, an auditor communicates to the management that this is an error, management will normally accept it and rectify it. And if the management is unwilling to rectify it, it gives you an indication that it may be a fraud. Are you getting this? Non-willingness of management to rectify an error gives you an indication that it could be a fraud. So beware. Are you getting this? Error is usually unintentional. Unintentional misapplication, unintentional omission of, unintentional oversight of policy, and things like that. Fraud is intentional. Intention is involved. Intentional theft, facets, is one type, and intentional playing with the numbers. No theft, but playing with the numbers to deceive the counterparty, that's also a fraud. To get the bonuses, to get the share prices up fakely, fraud. Theft of assets. Assets have been theft. Inventory have been theft. But there is a figure appearing in the financial statements. Fraud. Are you getting this? So primary responsibility to management to implement the operation of internal control, prevent, detect, correct the fraud. So these are what the auditor's responsibility. You can read those. Sorry. These are what the auditor's responsibility. They should discuss, they should be aware, they should be vigilant, they should perform the fraud risk assessment procedures, they should be open to any indications of the fraud, they should read the minutes, related party transaction, they should audit the judgments, estimate, year-end journals, inquiries, and things like that, everything. These are the procedures which have been prescribed by the standard. So you can go through these, okay? Easy, not a big deal. If the fraud is identified, although it's not the primary responsibility of the auditor, but if it's identified, then what? Then the auditor is supposed to report this fraud or error to, number one, in the first place, to the management. Communicate the fraud on a timely basis. Communicate the fraud, error, timely basis. Communicate it to fraud so that they can rectify, they can adjust the financial statements. If the fraud involves the senior management, the fraud doesn't involve employees, but management. Then if the fraud involves management, to whom we should report? Because if we report to the management, they themselves are the culprit. We should be then reporting to those charged with governance. That means the audit committee and non-executive directors. Fraud. If there is a duty to report to third parties, for example, the fraud involves the money of general public. It may need to be reported to Securities and Exchange Commission, the company's regulator. Getting this? Suppose the fraud involves a big number, provision, expense. It needs to be disclosed in the financial statements. We may need to modify our opinion. For example, the management is not willing to adjust the financial statements. We have no other option but to but to report it in the modifications paragraph. Are you getting this? Simple as easy as that. So this was fraud and error. Auditor's liability. This is an easy topic, and you can read this. I'm simply summarizing it. You can go through it. I'll be sharing these slides, notes with you. What we're discussing here, we're discussing that auditor is auditing the financial statements. Auditor is giving the opinion. And obviously, someone is relying on that opinion. For example, a shareholder is relying on the opinion to take the decision. Are you getting this? But can any Tom, Dick, Harry download the financial statements, for example, for a listed company, and may rely on that? Yes. Can there be a possibility that auditor opinion goes wrong and those who relied on the opinion suffered loss? Possible. Is auditor liable to everyone? Answer is no. Auditor is only liable to the person to whom he gives duty. To whom? If auditor was in the knowledge that any third party is lacking to rely, he belongs to sufficient proximity. if auditor owed duty to care to that person, for example, shareholders, they would rely on the financials. Simple. New investors, they would rely on the financials if it's a listed company. An aggrieved party relied on that opinion. Aggrieved party. Aggrieved party would have acted differently if the financials have shown different picture. Auditor is liable. And to manage this liability, they have professional insurance. They have their paperwork, proper paperwork. They should comply with all ethical professional standards. They should perform all procedures as prescribed by the standards. So they could be potentially auditors get sued for 100% of the shareholders' loss, even though auditors do not to fully blame. Unfair. They can be sued. They can be sued. But the solution is they should limit the liability. There should be liability caps, professional indemnity insurances, and things like that. Are you getting this? Solutions to the negligence problem: restrict the use of documents to intended use, engagement letters, screening clients, taking specialist advice, respective responsibilities and communications agreed, are communicated and agreed, and insurance. Expectation gap, we've already discussed that the shareholders think that auditor is there to identify fraud. Auditor is there to test 100% transactions. That's not the case. Auditor tests on sample basis. Yes, auditor focuses on non-compliances, auditor focuses on fraud, but auditor is not primarily responsible. They are only responsible to perform those procedures which the standards are prescribing the auditor to do so. So this is the expectation gap. How can we bridge this gap? We need to educate the users. We need to educate through auditor responsibility. We need to educate through CAMPARA, written representation, increase communication between auditors and those charged with governance, increase in scope of work. Yes, we can increase the scope of work if the auditors expect that we are taking care of the fraud-related elements. We can increase the scope of work. We should get the fee as well. What on earth is making us work too much for the fraud? You're not going to get the audit fee much. Getting? And the next topic is quality management. Quality management, again, is a very important topic. It's being frequently asked by the examiner. The examiner is now very much interested in this topic. There had been amendments in this standard a year ago. It is now ISQM, International Standards on Quality Management. What these standards talk about? These standards talk about the quality of service. The quality of service. Whose service? Audit service. Professional service, which we being auditors are providing to our clients. The standard focus is that we should deliver top-notch quality. We should be careful about the quality. We should be concerned about the quality. The entire firm, top to bottom, should be concerned about the quality. The leadership should be very concerned. They should set the tone at the top. Ethical requirements should be top-notch. The compliance should be very rigorous. Acceptance and continuance procedure should be rigorous. Engagement resources should be trained and skilled. Engagement performance, whatever task they perform, whatever audit they perform, whatever engagement they perform, should be top-notch. Then monitoring, process of monitoring, whatever is going okay, but there should be someone to monitor it. Otherwise, it will detract. So who is responsible for overall monitoring and remediation? Obviously, the leaders. Overall responsibilities of the partner to be signing the audit report, obviously. And obviously, documentation will prove that how much better quality audit we have done. The better the documentation, it means it will reflect a better quality audit. Are you getting this? So this is about the quality management, but there are a few elements on which we need to drill a bit. So key features I've already gone through. You can read on your own. Out of these features, very important, which we have already discussed a bit in ethics. This is important. Very important. This is important. This is important. This is very important. So, out of these five elements, sorry, not five, my bad. Out of these eight elements, 1, 2, 3, 4, 5, 6, 7, 8. Out of these eight elements, this, and this, these three are very important, usually tested. Ethical requirements, same as above, they've already discussed. Acceptance and continuance. Before accepting a client, standards say that you need to perform few quality checks, integrity and ethics of the client, sufficient appropriate resources available with you to audit that client. Is that team competent and capable? Things like that. Then, or the standards emphasize on engagement performance. Has the engagement been properly directed? Has the instructions been issued properly? Has the instructions issued been supervised properly? Are they on track? Are they going on track? Are the team members going on track? Are their problems being resolved? Are their confusions being clarified? Is it being properly supervised? And once done, has it been properly reviewed by the senior or the partner? And even after partners review, there are few engagements which are risky. For example, listed clients, public interest entities. Then has there been engagement quality review? Another partner review, pre-assurance review, pre-issuance review, before issuance audit opinion. And that other partner reviews significant judgments and conclusions. Getting? Others are very easy requirements. We've already had a brief discussion. Very, very important slide. Very important slide. Engagement performance. Engagement performance. So I think, yeah. So this is very important aspect and frequently tested aspect, as I told you. Engagement performance. Why it is focused so much? Because if we talk about an audit engagement, or I always give an example, if we go to a restaurant, suppose the quality of the restaurant is top notch, ambience, environment, staff cooperation, temperature, ergonomics, cleanliness, everything. Top notch. Top notch. You've ordered the food, all varieties available, a nice aroma is coming. When you ordered the food, it was in front of you on timely basis, on time. But when you taste the food, taste is not good. Taste is not good. And yeah, sorry, the starter was very nice as well. Nice crackers. But the main course meal is not good. Everything was perfect. 11 out of 10. But if you talk about the main course meal, it's 4 out of 10. I am asking you a question. Will you visit that place again? My question to you. Respond me in the chat box. Everyone, please respond me in the chat box. That's great. No one will revisit that restaurant. No one is interested. Why? Everything was top notch. The main course meal, the main purpose for which you visited the restaurant, that main course meal, that was not good, was not tasty. Similarly, our engagement is the main course meal which we are presenting in front of our clients. Our leaders are qualified, our firm is very elegant, nice, top notch office, lots of resources, but we are unable to deliver the good service when we are performing our engagement. The main course meal was not good, it was spoiled. Entire image will go down. So, this is the main deliverable. This is the main service which we are providing. Okay. So, engagement performance, tracking engagement performance is divided into three areas: direction, supervision, and review. In exam scenario, you get questions which involve an audit, and that audit was not of good quality. There are multiple problems. So few problems will relate to directions, few problems will relate to the supervision area, so few problems will relate to the review area. Let me first of all explain you briefly direction. We have to give directions to team members properly. What they should do, how they should do, where should they spend time, what should they do, what should they follow, should they follow ethical requirements, how should they perform the procedures. First of all, we give the direction, which areas to target, which areas to focus. Are you hearing this? Then, whatever directions we have given them, there should be a senior guy, senior person, job in charge who should be supervising. Whatever has been told is being carried out or not. So, tracking the progress, considering the competence of the team, addressing the matters, and identify those matters which need to be further escalated to the partner level or senior manager. And review is done by usually managers, senior managers, partners. Even before partners, managers, senior managers do the review, and then it goes to the final review of the partner. And what they see, they check that audit work, checking the audit work to ensure the work has been performed as per the standard, appropriate consultations have been taken, judgments and estimates have been properly reviewed, work performed supports the conclusion, whatever work has been performed and whatever conclusion has been written, they won't match with each other. Sufficient appropriate audit evidence obtained or not, things like that. And if, okay, before discussing this slide, let me go to another slide. Acceptance. See, here we saw, this is very important. We already highlighted here acceptance, accepting the client and performing certain or additional considerations, keeping in view certain additional considerations when you are accepting the client is very important. This question is very important as well from exam perspective. See, so after this, oh, okay, one matter which I forgot to tell you, review. The work of person should be reviewed by the senior person. Obviously, junior cannot review the work of the junior. Should be a senior person who should be reviewing the work. Okay, so this is an important aspect. Exam focus, quality management. We'll discuss this later. So issues to consider accepting the engagement, which are green highlighted in the above slide, that it's very important. What issues to consider when you are accepting the engagement? Many issues. You should take professional clearance from the previous auditor, preconditions of the audit, that you will get all the evidence, you have unrestricted access, and financials have been made by the management. Reputation of the client is good. You are professionally competent. You are independent and objective. Fee is okay to you. Management's integrity is good. If management integrity is not good, if management is not honest, problem. If preconditions of audit are not there, problem. If reputation of client is not good, it's a problem. Fee is not commensurating our services, that's a problem. Management, money laundering is a problem. We don't have resources, problem. Client is too risky, problem. So all these problems are important from exam perspective. I have summarized it in another chart. This covers maximum points. Acceptance consideration. Whenever you are onboarding a new client, before accepting, you should be taking care of these considerations, because exam question will usually test those considerations. First of all, ethical issues. Is the client which I am accepting is ethical? You've already seen ethics just before this. Are we competent to perform these services? Do we have the expertise? For example, oil and gas audit. We have not done oil and gas audit. Can we do this? Are we competent? Staff and resources, are they good? Are they capable? There's a shortage, need to increase staff and resources. Okay. And if you don't have staff and resources, then we may say we cannot conduct the audit. We cannot meet the timing and the deadlines. Should be bearable, not too quick, not too short, that we compromise over the quality of the work. Other professional considerations, money laundering checks, etc. We know this. Fee considerations. Is it as per our is it as per our effort or not? Conflict of interest, already discussed. Client screening, KYC, integrity, discussed in money laundering. Professional clearance from the outgoing or professional clearance means, suppose if we are accepting a new client, then we should send a professional clearance letter to the previous firm. Please let us know any issues, why we cannot become the auditor. Professional clearance. If there would have been any problem, they would communicate that this was the problem, this was the problem, this was the problem, due to which you should also not accept this audit. You have to assess the preconditions of the audit present or not. Okay. And this section relates to non-audit assignments. Okay. So non-audit assignments consideration include Okay. So non-audit, the non-audit considerations contain almost all the points of audit as well. Plus, there are additional considerations. So all the points are valid. Okay. The preconditions of audit will not be there in the non-audit, obviously. Professional clearance, not as such, but obviously we can ask the previous auditor. Yes, we can have the professional clearance or not. If it's not professional clearance, because you are taking clear, you take usually take clearance when someone else was doing the audit. So professional clearance, uh, just a moment, because suddenly, uh, I felt like very sleepy. So professional clearance in audit, we usually take professional clearance, but in non-audit services, if the client has asked us to perform any non-audit service, then can we ask the existing auditor, please let us know what are the ins and outs? Why you haven't accepted this? Why they are coming to us? You are the existing auditor. Why they are not asking you to do the non-audit service? Or are there any issues that we should not accept it? Although it's not audit professional clearance, but yes, we can have a discussion, we can have communication. Preconditions of audit are there, but obviously, since this is not audit, so we might not need preconditions of audit. But ethics should be complied, competence, staffing, timelines, other considerations, fee, conflict of interest, KYC, all applicable in non-audit as well. Additional considerations. Who is the intended recipient? Are we providing the opinion on cash flow forecasts, future forecasts? To whom that future forecast will go? Who else can have the report so that we can assess our liability? What level of assurance we should give? Is it reasonable assurance or negative assurance? We will discuss it later. What evidence is expected? What is the subject matter? What I will be checking in this? What is the purpose of the subject matter? Who prepared the info? When prepared? How was it prepared? Are you getting this? So these are important considerations. When a question will come, we'll see question in which we will be required to evaluate ethical, quality control, and professional considerations, including acceptance considerations. And in many questions, you will see these type of requirements, especially non-audit questions, frequently tested. Okay. So at this point in time, unfortunately, since I'm tired, very tired today because I had back-to-back meetings today, I had to drive a lot today. And feeling a bit sleepy. So there could be a possibility that I may say something which may not be related to this. I may I may be talking about the conduct of the audit, but I may jump on to the non-audit assignments because my mind will be sleeping in next few minutes. So it's better to call off the session at this moment, at this point of time. Unfortunately, we could not discuss much. Unfortunately, we could not discuss more in today's session. But rest assured, hopefully, inshallah, tomorrow and day after tomorrow, these two sessions will try to cover maximum things. Recent, along with recent past exam questions, practice, and focus on exam techniques, things like that. So I'll keep the session till here before moving on to the planning section. I'll keep the session till here and we will resume our discussion from here, inshallah. And we will also look few questions. If not tomorrow, then day after tomorrow. Okay. And Saqib, these lectures will be uploaded shortly. Hopefully, today's lecture will be uploaded tomorrow, and the Saturday one will be uploaded on Monday. Okay. Thank you very much. So I'm keeping this session till here. And from tomorrow, we'll be discussing planning, conduct, and finalization of 3 core areas and non-audit assignments as well. And we'll be looking at the questions, which will be our main focus. Okay. So thank you so very much. May Almighty bless you all. Take care a lot. Bye bye. Allah Hafiz.